Hi everybody, this is Lara at pureelliottwave.com with an updated analysis for Cardano for you today, ADAUSD. I had two wave counts last time I analysed this several months ago. I think it was December last year. And my first wave count, I've just made a couple of changes and I got interrupted with recording. So my first wave count had another 1, 2, and that's been invalidated. So I was just having a look to see if I could see this as a continuation of primary wave 4. So I'm not going to go with this wave count, but I just want to explain why I'm not going to consider this a primary degree 4th wave. If for Cardano from the beginning back here, I've started it in October 2017. That's where the data that I got from Yahoo Finance started, and I'm seeing a cycle 1, deep cycle 2, and then a cycle 3 underway with primary 1, 2, 3, 4. No, I'm not going to label it primary 4 here because primary 4 would be 35 weeks in duration. This is a weekly chart. Oh, this is a weekly chart time frame. Primary 4 would be 35 weeks. Primary 2 would be just 7 weeks. Primary 4 is much, much too long in duration to be a counterpart to primary 2. They should be more even in duration. This gives this wave count the wrong look. So this is, I think, the wave count I want to go with. So that means for the short term, this analysis is bearish for Cardano. So still have cycle 1, cycle 2, yep, still got that. Cycle 3 underway, but only primary 1 and primary 2 unfolding. Let's expand this out on my weekly chart here. So I'd be expecting cycle 3, 4, and then 5 to continue when primary 2 is complete. So immediately bearish, but long-term extremely bullish. So I'd expect primary 2 to end somewhere in the normal range of 80 to 90% the depth of primary 1. So that's 0.75 to 0.327, somewhere in that depth, in order for it to have a more normal depth for a cryptocurrency. That's usually how deep the big second waves are. What am I viewing this on? Semi-log scale. Yeah, if we view it on an arithmetic scale, it just looks terrible. So you've got to view cryptocurrencies on a semi-log scale because the exponential growth rate is huge. Any market that has an exponential growth rate, and an exponential growth rate is any growth rate of any percentage, even 1% or less, still exponential, just a slower start. Any market or set of data that exhibits exponential growth should always be viewed on a log or semi-log scale for a higher time frame. When we get down to the lower time frames, we can view it on an arithmetic scale. Trend lines and trend channels should work better. So I've just had, I don't know if you want to know, but I've just got out of hospital a couple of days ago. Still not quite well, but getting better. Just had some things had to get done in hospital, which was most unpleasant. I don't like hospitals. I guess the people who work there are really nice and stuff, but you know, when you go there, you're generally not feeling your best. So that was really unpleasant. Oh, I'm not sure that I like the look of this wave count here. I'm trying to answer the question, is primary 2, is the structure complete? Let's try a channel around it first. What scale am I? Yeah, this is an arithmetic scale. So let's try like a base channel. Hey, that looks pretty good. And I've got a terrible internet connection in my current location. That's that weird sound it keeps, my motive wave keeps reconnecting. Okay, so that's a good channel. So I've drawn it from this high to this high, perfectly touched here. 1, 2, 3 tests of support, 3 tests of resistance. Got quite a good slope, so it doesn't have great technical significance. I'm going to create a new chart and have a play with this. I usually call that play. I don't want to lose my work there, but I want to have a go at something else. Let's try a single zigzag. Yeah, not a lot of luck with the health going on lately. COVID and then hospital. I mean, it's got to be over now, right? That's got to be all they've got for me, please. I would like to move on with life. I'd like to be surfing again. I've been landlocked for too long. It's just really starting to bite. Because that little be a little triangle. A, B, C, D, E. It could be a little barrier triangle. Let's get some labels in there. That actually looks okay. Let's get some lines, trend lines on it. Yeah, and the E of the triangle falls short of the AC trend line. That looks pretty good. So if that's a triangle, then maybe we're looking at a single zigzag for primary wave 2. Oh, and I like this. Intermediate B is an expanded flat. So common to see B waves as expanded flats. I don't know about this first wave though. And here's a triangle. Oh yeah, that's why I had, oh no, is it? A, B, C, D, E. Could this be a leading diagonal in the triangle is a B wave? Okay, but do the wavelengths work? 1.05, 0.66, 0.62. Yep, they're decreasing. 0.53, 48, oh no. Oh, hang on. If I put this here, no, the trend lines aren't going to work though, are they? Oh, that's terrible. No, I can't have that. Okay, so the trend lines of that diagonal should work better than that. Oh, this is a problem. I don't know if this third wave is going to work. Oh no, actually. Let's see. No, I don't want to see a running flat here for minute wave 2. That's just, nope, can't do that. So I've got to put this here. Now is this third wave going to work? I don't think it's going to work. Oh, you know, it could work with that there. And now, how is this going to fit? I don't mind having more brief fourth waves than second waves. I'm just checking to see, yep, C moves above the end of A, so this isn't a running flat. I don't mind having brief fourth waves and time-consuming second waves. I've learned over the years, I've been analysing gold on a daily basis for over 10 years now. As a commodity, commodities exhibit swift, strong fifth waves, and that tendency is especially prevalent for a fifth wave to end a third wave 1 degree higher. And when it does that, it forces the fourth wave just before and just after to be much more brief and shallow than it would usually be. So I'm used to seeing that tendency in commodities, and it gives the fourth wave being very brief compared to its counterpart second wave much more time consuming. It gives, in a commodity, it gives an impulse a 3-wave look, a curved look. So I'm quite used to seeing a movement that looks quite curved in a commodity and labelling it as an impulse. It took me a while to get the hang of that, but that is a tendency of impulses in classic technical analysis terms. It's certainly accepted that commodities have a really big, strong tendency to blow off tops and sell in climaxes. In Elliott wave terms, those are the points of the third wave, the end of the third wave. Okay, so I'm used to commodities doing that, and I've noticed that cryptocurrencies also do it. Cryptocurrencies tend to behave like extreme commodities. Those tendencies I've gotten used to over the years with gold and silver and oil as commodities, I see displayed in pretty much every cryptocurrency chart I've ever looked at to an extreme degree. So I'm super happy with this, but are we going to get the triangle in there? No, we're not. Well, that's okay. So A is a 3, B is a 3, C looks like some kind of diagonal. That's fine. Are we going to get the third wave, the middle of it in here? Well, no, I'd want to put this here. Is this going to overlap? Yeah, okay. Oh, is this not going to work? Oh, no, it is. Here we go. Yeah, that actually looks pretty good. Let's expand this out so we can see this more clearly. Yes, that looks good. Okay, now also, I don't know, I get some weird comments sometimes. Someone tried to say that it was a rule that your lower degree corrections could not be more time consuming than any correction of a higher degree. That's just, it's not a rule. It's like a guideline to the right look, but it just doesn't always work. Sometimes lower degree corrections are more time consuming, and the price history of whatever it is you're analysing is going to show you if that's the case. So no, it's not a rule. I don't like when it happens, and I try and find a better wave count if I can, but in this case these subdivisions are looking good. Here it all fits, there's no overlap between fourth and first waves. That's good. Okay, so I think I prefer this wave count to this wave count for primary 2 because this X wave is so brief. I think I don't like that either. Yeah, I think this is better. Yeah, if the triangle is here and there's a little fifth wave, actually, is that fifth wave truncated? 1.205124, 1.18. No, it's not. It moves beyond the end of the third wave. That's good. I don't like truncations in my wave counts. Okay, so I think that let's have a go at a target for primary 2 for Cardano. Well, C can't reach equality in length with A because that would take it into negative territory and below the invalidation point. So let's calculate 0.618, the length of A. Okay, that takes us down to 0.45, and that takes us within this normal range of 80 to 90% the length of primary wave 1. So let's bring in some labels for that. Okay, that's my conclusion for Cardano. Probably more downward movement. For primary 2 to reach 0.45011, which would see it end within a normal range. That's my target. It will probably take a few weeks to get there. Let's take a look at some classic analysis now. Okay, let's do some classic technical analysis for Cardano. We'll start with the weekly chart and then we'll go down to the daily chart level. I've just updated my charts. It's still finding strong support, about $1. Resistance just a little bit below $1.40. There was a selling climax here on this week. We can see it at the weekly and daily chart level. I was talking before about that behaviour of commodities, and you see it to an extreme degree in cryptocurrencies, and it's done it again. I've discovered, though, over the years that the blow-off top or selling climax is really the end of the movement. Here's a blow-off top. This is what I mean. Here's a blow-off top on this candlestick here. It's got a long bullish, long lower wick, but you saw some consolidation, upward breakout, coming back to test support, another upward breakout and a little bit more of a high before we move into a big bearish move. So this blow off top was not the end of the movement. You usually see some consolidation after it, and then 1, 2 or even 3 or 4 highs beyond that you'll see the final end of the movement, and then you'll have a big trend change. So this selling climax, it works in the other direction too. I expect the selling climax is not going to be the end of the movement. We've got some consolidation. I'll expect most likely a downward breakout. That's exactly what the Elliott wave analysis also expects. So it's nice to see the classic analysis when it aligns with the Elliott wave analysis. Then I can have more confidence in the Elliott wave count. So I'd expect a break below support below $1, and then I would probably find some good support about 40 cents here, and good support here about just below 20 cents here. The last signal at the weekly chart level from on balance volume is bearish. It breaks below support, but this is pretty weak. It's got 1, 2, 3, 4 tests of support. It's long held, but it's got a bit too much of a slope to have strong technical significance. But we do get a bearish signal here. So again, that fits with a bearish Elliott wave count. RSI is in neutral territory. It's not yet oversold, so there's further room to go. ADX, though, is telling us there's no clear trend at this time frame at this moment. The price is moving sideways. It hasn't caught up with the fact that there's been a trend change. Here, the upward trend was very extreme. This is another feature so typical of these cryptocurrencies. Normally we call a trend extreme when it's above both DX lines, when the ADX line, this is the black ADX line, positive DX, negative DX. Positive is above negative, the trend is up. negative is above positive, the trend is down, but you have to have a rising ADX line to indicate a trend. So rising ADX line, positive above negative, this indicates an upward trend. When the black ADX line goes above both DX lines, the trend is extreme. When the black ADX line reaches above 45, the trend is extreme. When both of those conditions are met, the trend is very extreme. But cryptocurrencies can get even more extreme than that. So that's normal if you're looking for a regular commodity or an index or a stock. But if you're looking at a cryptocurrency, I'd say it's very extreme if it gets above 60. And here it got just dipped above 70 here at the end of this upward trend here. And then it starts to decline at the end of that trend. The ADX line is still declining. The DX lines are now whipsawing. The negative DX line has just crossed above the positive, but the black ADX line is still declining. It is now just below both DX lines. It's not at a very low number yet. It's 17.98. If it gets to 15, it's too low to indicate a trend. What happens now, if the black ADX line starts to turn up, and the negative DX line remains above the positive as it is today, it's 19.4, which is above 18.06. If that happens, then a downward trend would be indicated. This is a lagging indicator. Almost all indicators are, except for volume and breadth and volatility. All of these other indicators are all lagging. This one here is based on a 14-week average, so it takes a while for that indicator to catch up with price change, with changes in trend. So it's not indicating a downward trend yet. Okay, that's enough of my explanation for how to use ADX, or a couple of ways. Stochastics oversold, RSI neutral. Yep, still plenty of room for a downward trend to develop, or at least there is one here. Lower lows, lower highs. ADX hasn't caught up. Plenty of room for ADX to catch up and RSI to reach oversold before this one could be done. What about the short-term picture, the daily chart level? Oh, just before I go there, I'm adding at the bottom of my charts because I know people are going to ask me. My wave count for Bitcoin at the moment is quite bullish, but my analysis here for Cardano is quite bearish. How can both of these things be true, Lara? People are going to ask. Well, this is why. The math tells us that these two sets of data are not correlated. They do not have a reliable, statistically significant correlation. Here's the correlation coefficient. Handy tool in stock charts. Very, very quick lesson on how to use a correlation coefficient. It ranges between +1 and -1. Above 0, positive correlation. Below 0, negative correlation. But the shaded area between 0.5 and -0.5, weak positive, not statistically significant. Weak negative, not statistically significant. So any time spent in the shaded area, the two sets of data do not have a statistically significant correlation. They will often exhibit a positive correlation, but this is the problem. If you're analysing one set of data and you expect it will have a correlation with your other set of data, and your analysis of data set A says, well, it has to go up. Oh, that means data set B, well, that also has to go up. No, not necessarily. Check the correlation coefficient. If the two sets of data don't have a statistically significant, reliable correlation coefficient, that tells you that they are not always correlated in a positive or negative way. So if we're assuming a positive correlation, as I think most people would like to assume Cardano and Bitcoin should move together, you don't have to look at the chart for a start. Do they peak and trough at the same time? But also look at the correlation coefficient. Does this remain reliably above 0.5 in this area, above the shaded area? Absolutely not. It breaks down to weak positive and to weak negative. They can actually have a weak negative correlation from time to time. So just because I expect Cardano is going to go down doesn't mean I also expect Bitcoin has to go down, or vice versa. Let's jump over to the daily chart. And I did a whole video on that, oh crikey, months ago now. It was probably the most controversial video on this YouTube channel. I was so surprised that simple math could be that controversial, but I guess people don't like having their assumptions challenged. I don't mind. I mean, I've got to go with the data. I'm just going to go with what the data says. Okay, short-term picture, moving average situation. Full bore bearish, excuse me. The short is below the mid, is below the long. They are all negatively sloped today, and price is below all three. That's a full bore bearish look. We had a death cross back here with the Fibonacci 55-day moving average, the purple one, moving below the 200-day moving average. I don't know, it's just a quirk, I guess. I've got a Fibonacci 13, Fibonacci 55, and then your standard 200-day moving average I like to use. Some bullish indication here. Did get a bounce, new low, another bounce, hammer candlestick here, hammering out a low. These are bullish candlestick reversal patterns, and this one comes on a selling climax. And again, after you see a selling climax, expect some consolidation, and then for that trend to resume downward. That's the most common behavior of almost all, not always, but most commonly that's what will happen after a selling climax. So we've got some consolidation, we've got resistance about 1.25, pretty strong support just about $1 and just a little bit below at 95 cents. Let's look for a breakout downward, I'd expect, from Cardano. Weak bearish signal from on balance volume, price moving sideways, volume declining. ADX at the daily chart level, no clear trend because the ADX line is declining. It's also below 15. It has to reach 15 and above before you can read it as indicating a trend. That's to remove too many early false signals. I'm using the guidelines from Kirkpatrick and Dahlquist Technical Analysis textbook, one of my favourites, for how to use ADX here. The DX lines are whipsawing. That's typical behaviour when price is consolidating. RSI neutral, plenty of room for price to rise or fall if a trend develops in either direction. Today, the negative DX line has just crossed above the positive, but they are whipsawing, so it's not clear yet. They're very close together. Stochastics neutral, ATR declining as price moves sideways. And at the daily chart level also, here's that correlation coefficient between Cardano and Bitcoin. Here, look, it moved into fully negative territory, so there's just no reliable correlation between these two sets of data. Okay, that's it for me with some Cardano analysis for you. I hope you find this useful. I hope someone finds it useful enough to make some money out of it. I'll be looking for a low for Cardano to possibly buy a little bit more of it when it reaches its low. And I'll add to that and I'll hang on to that for probably a few years. That's my approach. I much prefer a longer term outlook over several years rather than just a short in and out burger. I don't like it. It just doesn't suit my personality. And I just find long-term investing so much easier and less stressful. Okay, thank you so much for watching if you managed to get through to the end, and I'll keep working through that list for you.